turn the time over to our next moderator, David Drake with LDJ Capital. David, I get that right?
Yep.
All right. And we're going to talk about real estate crowdfunding. So take it away, David.
Thank you. Let me see what time it is. We've got 45 minutes, so we're going to try to stick to that. Well, there's a huge trend this year, and it's going to be in real estate. It's exploding. And our firm, we invested in a company called the Soho Loft. The Soho Loft has been focused on writing articles for Wall Street Journal, for Forbes, and we also have events. So we're going to have Sydney sponsor and work with our event in New York on real estate. Last one, we had $30 billion under management showing up at our event, talking about real estate and crowdfunding. Now, we got some of the leaders here in the space, and the work we've done in the past has been to just follow what's happening in the industry for the last 3 years. We actually were part with Jason Best when we were lobbying Congress 3 years, is it 3 years ago? Yeah, 3 years ago. And at the first meeting with the SEC, that some of the people here have been to, and we've just been following it and writing about it and covering it for the last 3 years. So we were really focused on the media and letting the world know and help them educate themselves what's happening not only here, but abroad on crowdfunding. So defining what it means and how the structure is set up abroad. For instance, in Italy, in UK, in Sweden, in Germany, in Japan, in Singapore. So I ended up traveling around the world for about 2 years now, interviewing people all over the place to see what's happening in the capital markets. One of the focuses that we decided to focus in on is real estate. We have a family office network of 200 family offices globally looking at real estate opportunities. And we realized that crowdfunding is definitely a place that could work for them as you take it offline to online. So you're going to meet some of the leaders in the space today on the panel. They'll talk about what they're doing here in the U.S. Look, it's always been more transparent to do business in the U.S. So foreign investors have always wanted to come here because there's more transparency, there's a better recourse system, there's a better legal system, and they're historically loved investing here. So we have family offices in Saudi in the Middle East now starting to invest back in the U.S. And some of these platforms on here, and we don't have a platform. We're just doing media today. The platforms here are going to get a chance to be the leader in their space, and we're estimating there's going to be over 100 crowdfunding for real estate platforms end of this year because you have a real asset, and that's something that cannot be taken away, which makes it a more secure investment. And we're going to have everybody on the panel talk about their business, talk about what they've done in the past, what they're doing now, and where the industry is going to go in this space. But there's a lot of activity. We got public companies coming to us asking us, how do we get into crowdfunding? We got private companies and family offices, and of course, startups and early stage companies. There's a real movement here, and we're finding out from companies that, or fund managers or developers that they're getting investors they never thought they would find because of these platforms we're talking to. Because of the internet, you can make the offerings go everywhere, and people will start finding opportunities that they locally would never have seen. So we have testament to that, and part of that is we have a publication focused on crowdfunding and real estate called Times Realty News. And we also are coming out with a report on the top 10 crowdfunding real estate platforms and what they're doing and how they're unique. Actually, I think the report will be out tomorrow. So I wanted to announce that as well. But I'm probably going to give everybody here a minute to talk about their company, maybe 3-4 minutes, and then we're going to go into a couple of questions and see what's happening with the leading crowdfunding real estate platforms today. Sure. Go ahead, David.
Dave, thanks for the intro. My name is David Manshuri. I'm the founder and CEO of Asset Avenue. We are a real estate crowdfunding platform. Our focus is on commercial real estate. We don't invest in residential real estate on our platform. And the reason we focus on commercial real estate is because that's where my background is. I started in commercial real estate over 10 years ago. I worked at a number of very large firms in acquisitions and development, underwriting big assets, most notably Westfield shopping centers, and underwriting really large retail assets across the western half of the US for them. And I went on to start my own real estate fund, raising capital from friends and family in Los Angeles, where I'm from. So I was a syndicator and a sponsor for my own deals, raising capital the traditional way. And this is really what led me to start Asset Avenue, because capital raising is the biggest pain point for sponsors. No matter how good they are at it, they dread it. And it's a necessary evil for them to go and raise capital from investors. So I'm excited to announce that we just recently launched, and we just recently closed our first deal, which we can discuss later. And our leadership team and the people I've been able to bring on board are really top-heavy with industry experience in commercial real estate. And we're excited to be here and share the stage with the rest of our friends here.
Before we go to the next person, can you just tell everybody who Westfield is? Because they're pretty big, if not the biggest one, and not everybody here knows who they are.
Sure. So Westfield started out of Australia about 70 years ago. They are the largest retail property group in the world. Most of the women are shaking their head because they've probably shopped at their shopping centers. But their projects range anywhere from $50 million to several billion dollars. And I was focusing on about 15 projects ranging anywhere from $50 to $250 million. And it was either for ground-up development or the redevelopment of an existing shopping center.
Thank you, David.
Sure.
Carlo from Patch of Land, please tell us.
Hello, everybody. My name's Carlo Tabibi. I'm the CEO and founder of Patch of Land. We're a crowd lending platform rather than a crowdfunding platform. So as they were discussing earlier, we're focused solely on debt. We're currently focused on the residential market. However, we're moving into the commercial market as our platform grows. The reason I came into this industry was I've been in real estate for 20 years. I've been investing in other technology companies for 15 years. I co-founded a few different companies, and I'm still partners in those companies today in the technology field. And then in the last 5 years, ever since the downturn, I started doing hard money lending and loan syndication in the field. So about a year ago, I read some news about the space, and I thought this is a great place for me to be in. It's a crossroads of the areas that I've worked in for the last 20 years. In terms of real estate, I've done the gamut of homes, commercial, residential, office, both domestically and internationally, as you can tell the English accent. So I've done it in the UK on a few different government buildings. And on the debt side, so why hard money lending? Well, I think a few people have discussed that the equity compared to the debt risk portfolio that's there, the debt side is a little bit safer, but I'll leave that for a later question, actually. So I'll pass it on back to David.
Well, I actually wanted you to talk more about, what kind of properties you invest in as well, because you have a message as well to talk about what you can do in certain communities.
Sure. So the different outreach that we're doing right now is we're focused on residential fix and flips, whereas everybody else is trying to focus on the commercial market, and it's a great space, the commercial market too. But the reason why we're doing the fix and flips is we believe that we're building the communities of America by helping some people buy, build, rehab, and flip these properties to the overall home market. So somebody reached out to us, for example, in New Orleans, and they want us to go into New Orleans with the city of New Orleans and help rehab some of the houses that are there. And as you all know, there's a lot of damaged homes. Also, New Jersey is where we're focused on today. And the state of New Jersey has also reached out to us and say, hey, this is a fantastic job you're doing for the state. So again, building communities in America.
All right, thank you. Jillian, you just raised $9 million. You'd like to lead on crowdfunding for real estate in North America. Pleasure having you here. It's an honor to have you here. You're very busy. You're traveling all over the place, talking a lot at conferences. So love to hear how that came around and what you were focused on.
Yeah, it was interesting. There was a female panel before this panel, for those of you in the room, who was talking about opportunities for women in crowdfunding. And I'm a woman in crowdfunding, and not only am I the CEO of a crowdfunding company, but we just raised the largest round ever for a crowdfunding company in any vertical. So real estate, startups, small businesses. Actually, our lead investor's in the room, so I won't embarrass him, but thank you. Realty Mogul is the largest real estate crowdfunding site in the country. We have invested in over $100 million in property. We've done 58 transactions. We're actively owning properties in 14 states. We have investors in every single state in the country, and it's just been massive astronomical growth. And I think that the regulators didn't have any idea that real estate was going to take the crowdfunding industry by storm. And it's really been a fun ride so far. And I can't even imagine where we take the company next. But growing a crowdfunding company has been one of the greatest joys of my life. I can imagine that the next 5 years of my life will be even more challenging as we continue growing the business. But for me and Realty Mogul, we focus on a band of real estate where we think that the risk and reward profile makes sense. So we're investors on the equity side, we're investors on the debt side, we're investors across a variety of geographies, but we really want to provide investors with the opportunity to diversify. So we allow them to diversify across asset class, both debt and equity. We allow them to diversify across property types. So we've done residential, we've done retail, we've done mobile home parks, we've done office, and we also allow them to diversify across states. So we'll have an investor who's in California who's investing with us in Texas and New York and Florida. We'll have an investor in New York who's investing in Memphis, Tennessee, or Atlanta, Georgia. And that's really important, I think, when you think about crowdfunding. You know, our vision is to change the way the world invests in real estate. It's a really, really big vision, and it's why we've now raised $10 million to execute on that vision.
Thank you, Jillian. Congratulations.
Thanks.
Before we go into some of the questions that we wanted to ask the panel, I actually enjoy researching and seeing how platforms are different. That's the research report we did. So I'm probably going to ask the panel right now to talk about how they differ and how they invest differently and how they structure their deals differently. Because we have one patch of land doing debt. We have your company, Asset Avenue, doing equity.
Debt and equity.
Debt and equity. And Jillian is doing maybe a little different structure across the board nationwide. So why don't we have you start talking about how you think you would be doing it differently from everybody else in the panel and what you think is the venue for your platform going forward.
Sure. So my opinion on this space is that we really want to make sure that all of us are focusing on presenting quality investments to the investors, because these are longer term investments. You're holding an asset for 3, 5, 7 years. And if an investor loses money on a platform, they are probably not going to come back. This is not like AngelList, where people are investing in technology companies and they anticipate that 95% of the investments are going to go south, but a few will hopefully be home runs. You're going to traditional investors who are doctors, lawyers, business owners, C-level executives. When you're investing in brick and mortar, you are hoping and betting on still holding on to that asset, whether you know, during a downturn in a real estate cycle. And real estate doesn't always move up and to the right. So you have to take a macroeconomic look and determine where the risk profile is, whether you're investing in debt or equity, and what market you're investing in, and what asset you're investing in.
Well, I wanted to find out, how did you structure the deal? Did you have an SPV and then you took the lead, or are you hands off, or are you just servicing it?
No, so on all of our deals, we are not investing in them. We do all of the upfront due diligence, and then we present them to our investors. We package their capital into special purpose entity, and we transfer the money to the sponsor. And then when the sponsor has their first quarterly distribution and property update, we manage all the investor distributions, relations, and communications. I don't think it's anything differently than anybody that's doing on stage. That's really the back-end technology that allows us to be efficient and scale. But on the front-end side, no matter how amazing your technology is, if you're not putting good investments in front of investors, you're going to have a challenge 2 or 3 or 4 years from now. And my understanding, having gone through a downturn, been in the real estate industry, and bringing people on our team that have weathered 2 or 3 cycles, we have a we're placing a strong emphasis on making sure we're going into safe investments. We can't claim it's a safe investment because nothing is guaranteed, but I want to make sure that the investor I bring in today is going to stick around 4 or 5 years from now. And we don't know where the real estate market's going to be then. So we internally have a lot of discussions around whether we want to invest in debt or equity. And right now our first investment was on debt. It was a debt investment, and that was done purposely because it was the best investment for us, you know, across the board when we were looking at all the other investments being presented to us.
Thank you, David. Carlo, give it.
So there were a few questions there, I guess, in a sense. I agree with what David's saying, but the reason that we're focused on debt today is because we believe it's so much safer. Not only is it safer for our platform, because again, we do have a responsibility to the crowd to make sure that all the deals do get paid back. These investors want trust, and the only way I can give them trust is by saying, look, here's a deal where the developer has a 30–40% equity-based value in the building, and you're going to get paid back before that person. So we go out there, we do the due diligence on the property and on the person. What we're trying to do is not just focus on the current area of debt, which is real estate, residential fix and flips, but all areas of residential debt. So while I'm focused on one area, the other area we'll go into is commercial debt, and maybe in the long run we'll go into tenant improvement debt and into other bank-based lending. So we're trying to go more towards being a bank, a little bit more like Prosper and Lending Club. So while they're focused on the commercial lending space, we're focused on the residential lending space.
Now, how long do you guys sit on the note? Average?
So we have different kinds of notes. I've been reached out to do a note that's 10% yield for 60 months. The ones that we're focusing on right now are 12-month notes, but they get paid back in 6 months. I'm able to give a yield of anywhere between 12 to 18% on those deals. And so far, the investor community is loving the opportunities that we're presenting because they're able to put their money in, sit on it, see how quickly it comes back. And the developers are happy too because they're able to get quick access to capital. One thing that we'd like to do is work again and again and again with these developers so it becomes a revolving door. And for anyone who understands that terminology, or doesn't understand the terminology, means if you've got one person coming to you one time, there's a cost of acquisition to that person. Now imagine that person reuses you and reuses you and reuses you again. Your cost of acquisition comes down, but also the knowledge that you have regarding that developer goes up, so your risk ratio drops as well.
On that note, Jillian, I mean, you have a lot of recurring clients. I mean, you probably have no churn. Everybody keeps rolling the money in. And how many investors do you think you have, or do you want to disclose that?
Yeah, I'm happy to disclose it. We have over 7,500 investors today. 70% of our clients are repeat investors, so we have an astronomically high repeat ratio. But I want to approach this conversation a little bit differently on, how do we structure transactions? And we're very different than other real estate crowdfunding companies in this regard. I approach and structure them the way that the regulators want me to. I approach and structure them the way that the regulators want me to. We are affiliated with a broker-dealer. We want to be regulated. We've gotten all of our people at the company licensed. We have said to the regulators, we're going to work with you. We're going to work alongside you. And that's very different than other people in this room, than other companies the way they're operating in this room. And I had two people walk up to me earlier in the conference and say, I'm launching a portal in a startup vertical or a medical vertical. What piece of advice do you have? And it's get regulated. I mean, it's so silly to think that we can ignore the regulators in this structure, and it really concerns me some of the other things that I see happening in the industry in our vertical and in other verticals, and so we structure them, the way that's regulatorily sound, and that's really important to how we think about it. When we structured the company originally, the entire premise of our company is built on investor protection and trust. And the only way that you can get investor protection and trust is if you do things in the best interest of the investor. Well, the regulators are in place to help you do that. They're not against us. We're really working with the regulators. And that's how we think about structure, and that's how we will always think about structure. It's not necessarily, what is the best choice for us today, this day. It is, what is the long-term choice for the investor, and what are the regulators going to be okay with as the regulators are looking out for the investor.
Now, are you only taking revenue-generating properties so you have a dividend on an ongoing basis, or would you do opportunistic opportunities like round up? Yeah,
so our focus to date has been all cash flow. I think about, the good old days of AOL, right, where you'd get an email from AOL and it'd say, you've got mail. Well, Realty Mogul emails, we send them every month, and they say, you've got money. So we've distributed out more capital back to investors in profit than most other real estate crowdfunding companies have raised total on their platforms. And we're really proud of that, right? We're proud of that because we need to get money out of the system. The way you build trust is to get money out of the system and have investors that are repeating with you. So we really focus on cash flowing real estate, whether it's residential or commercial. We don't do any ground up development. We do no land banking. We want to be in good, high-performing real estate, but we're not shooting for the stars. Our investors don't expect 100, 200, 300% returns with us. We're shooting for, singles and doubles to be a platform that is trusted and that is scalable.
Well, I was going to ask about also, how do you structure the deals? Do you have a special purpose vehicle?
Yeah, we structure through special purpose vehicles. And the reason that we do that, again, it all comes back to investor protection. You have all of these siloed special purpose entities. They're typically LLCs. And if something goes wrong in one, it doesn't dilute the interest of another one. So all of your investors are in sole and separate entities. They're sole and separate banking, sole and separate accounting, sole and separate funds. And you have to do that to protect the investor, in my opinion.
Well, Carlo, you actually put some of your own money into these deals. So it makes it a little different from everybody else on the platform. So tell us more about,
Sure. The way we're doing that differently is the following. So in the debt space, the people that we're lending to need money quickly. And as the hard money industry that exists already in the United States, these hard money lenders go out there, they lend the money to these developers, and they give it to them quickly, and then syndicate out the deals. So that's what we're doing differently. We're going out there and we're seeing a guy, he needed to borrow the money in 7 days, or the house would get foreclosed on and he wouldn't be able to buy it. So we said, here you go, here's the money, here's $550,000. We gave him the money, he paid off the loan. And we close the deal quickly. So then what we do is we syndicate that out to our investors saying, hey, I'm in the deal. If I'm in the deal and I'm putting on the platform, I trust my deal, right? If you want to take a part of that deal, that's great. You can take a part of it. If you don't want a part of it, don't. We're using a borrower-dependent note methodology, which Lending Club and Prosper are using. So it helps keep the cost down by not having to form a new LLC every single time. And so far, everybody seems to love that methodology.
I'm going to ask everybody here on the panel to talk about your fees. What kind of fees are you charging? And tell us about that right now, so everybody here understands how you structure your fees.
Sure. So I actually think this is a great segue because I wanted to comment on something that was brought up earlier. So having a real estate crowdfunding platform or a crowdfunding platform is regulated by the SEC no matter what. So we're all regulated by the SEC. What we're doing is really bringing fundraising that's been done offline and bringing it online. Nothing's really changing. So we're actually Reg D platforms. We're just taking Reg D 506B and bringing it online and letting investors come on to participate in the investments. Registering through a broker-dealer simply expands your compensation model, and it allows you to charge a commission up front from real estate companies in order to raise capital on your platform. So whether we're registered with a broker-dealer or not, the SEC still has the capacity to knock on my doors and say, what are you doing online, and are you complying with Regulation D? We're not registered with a broker-dealer right now. Most of our focus is not on hiring people that are licensed for the broker-dealer affiliation. We're focused on hiring real estate talent who know how to underwrite the assets and bring good deals to the investors. So because we're not registered with a broker-dealer, we're not charging real estate companies fees up front, and we make our fees on investors by managing the asset and doing all of the reporting during the term of the investment.
So are you taking a fee for, what fee are you taking for doing the project?
So per the SEC, we're allowed to take up to 2% a year on the investment. We're not stuck on taking 2% a year. It really depends on how much room there is in the deal and what's fair to investors. Because whether I want 2% or not doesn't really determine whether investors will like the deal. So our fees will adjust according to how juicy the investment is. And that's on debt and equity. On equity, you also have the ability to participate on the back end as a promote, and that promote is also going to be driven by the IRR of the investment, or the total return. So it's done on a case-by-case basis.
Look, Regulation D, 506D, was created, and we saw about $900 billion in private offerings in 2012. That's about the same amount that IPOs had that year. So this is the biggest exemption of the SEC for private offerings. So everybody here on the panel using the Reg D 506B, as opposed to C that came into law September 23rd. And eventually people will do that, but there are challenges with that. And Jillian will probably talk to that because she's like, well, I don't have to do C right now because we have plenty of people that will do B, and we have a big investor base, which is interesting. We'll bring that topic up in a second, but I wanted to hear, Carlo, about your fees at your firm.
So again, because we're lending to the people directly, we're able to charge the points up front to the borrower, and then we charge a small spread for the servicing on the back end of about 1% to the, call it, lender. We're issuing notes to the lenders and then issuing the notes again to the borrowers. So we're actually a middleman in that play and able to charge on both sides of the game.
All right, thank you. And Jillian, your fees?
Yeah, we charge a commission through the broker-dealer up front, and then we charge a 1% to 2% fee on an annual basis to the investor for managing the special purpose entity.
That's the 2% that David was talking about, right?
1 to 2, depending on the transaction.
Okay. I was going to talk about a little bit about where you see this market going to be by year end, or maybe 5 to 10 years. We're doing the research. We found over 40 plus crowdfunding real estate sites out there on a global basis, and they're popping up left and right, coming to our site saying, hey, we want to be involved with what you guys are doing. But I want to hear from the panel what you guys think is going to happen by year end. How many sites will there be pursuing this, and how much in capital will probably be closed by your own firm? And the third one being how much capital in general in North America will be closed in this area. So it's a three-pronged question. You want to start, David?
Sure. I think the exciting thing for all of us here is that it's so early right now. We haven't even started the first inning of real estate crowdfunding. And if you go to a real estate crowdfunding conference, the biggest uphill battle we all have is convincing people that have been in the industry for 30 or 40 years that this is legitimate. So I'm really excited that Jillian just raised a lot of money because it's the first time that we have a proof point to prove to the industry that we're for real and we're not going anywhere. But on the flip side, there are a lot of platforms popping up, and a lot of them are not going to survive. There are companies that started 6-7 months ago that have already shut down. One of them was called Collaperty, another one was called Globarex. And one of the biggest challenges is that you have people entering the industry who either have no real estate experience, no technology experience, because it's a merge of those two, or they're a first-time founder, and they have no idea how to recruit talent, raise capital, keep their doors open, be a leader in the company. There are 20 factors above and beyond even understanding real estate before you can keep your company to succeed. In terms of the market size, I think we're all very excited about it. Over $300 billion of real estate traded hands in 2013. That's just in terms of equity investments. If you talk about debt, you're talking about trillions of dollars. And I would agree with Carlo that there's a big opportunity in debt. It really comes down to understanding big data and understanding how to scale that opportunity. But it's very, very early, and we're all working really hard to present these opportunities to investors.
Okay, what about year end? What do you think is going to happen year end? How many firms might be out there?
There could easily be over 100 firms. Richard Swart, who was talking earlier, is an advisor to our company. He was talking about how $160 million was raised through crowdfunding platforms, and half of them were for real estate. So $80 million was raised. We can take $80 million and buy one building in downtown San Francisco. We still have the entire country to go after. So it's exciting, but it's also the challenge because we have to convince an entire industry that's been a dinosaur industry that this is legitimate. And a lot of people didn't believe that Zillow, Trulia, LoopNet, any of these were going to work. And we're all here to really help convince the audience, and not everybody here, because everybody here believes in crowdfunding. But again, going to the people that have been in the industry for decades to say that this is legitimate and that investors want to participate online. I don't know what the number could be at the end of the year. I think it's going to be astronomical. I think it'll be 3 to 5 times larger than what it's been in the last 12 months.
I want to quote you. That's why I'm asking the question. And I'm going to look back at another article in Forbes and say, okay, this is what they said. All right, Carlo, what do you want to say?
Look, I mean, in 2013, we launched October 15th. In that 2.5-month period, we did $600,000-$700,000 worth of deals. In the last 6 weeks alone, we've raised over $1 million on our platform. I mean, it's just going exponentially up, right? Jillian's done a great job leading the charge in the space, and she's raised, I don't know, $14 million in the last year or so. It's just going to get bigger and bigger and bigger. Where's it going to go? How many platforms are going to be out there? I keep hearing about a new real estate platform coming out every other day. Who knows what will end up happening? Like David said, there's a lot of skill and experience that's needed, a lot of trust and honesty and integrity that's needed in this space. In terms of how many dollars will be there, again, David's quote, this is an old boys club that we're bringing online into the 21st century. Crowdfunding is just the new terminology for syndication that was the 20th century terminology. We're able to use technology. I mean, for example, we're building a tool whereby we go out and gather data on a specific home, and we'll be able to rank someone's house from a risk level and the person's credit level the same way Prosper and Lending Club do, so we can sell that off to the hedge funds with an API tool. That's the kind of thing that we're trying to build. Someone said today that the credit unions are sending their business over to Prosper and Lending Club. It's going to be the same for real estate loans. We're going to be able to process those loans quicker, cheaper, more efficiently than they are going to be able to, and then they're going to be able to invest in our deals.
Thank you, Carlo. Jillian?
So the firm that led Lending Club Series A, Canaan, is the firm that just did our round, right? It's the firm that just did our $9 million round. And we had a long conversation with them about this, around how big is the market and how big does it get. And if you look at Lending Club and Prosper, it took them years to get to $1 billion in transactions. And they really paved the way for our space. I mean, I think by the end of this year, it's billions and billions of dollars in real estate that are touched by crowdfunding. And that growth is astronomical. It didn't happen in the peer-to-peer space. I think that our trajectory is going to be much, 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 much higher. But it's really exciting. It's an exciting space, and it's an exciting industry, and it's a very, very massive space. I mean, in the US alone, you've got an $11 trillion real estate market. So even if we do $4, $5, $10 billion this year, that's nothing. It's a blip on the radar in real estate. So it's really a massive opportunity, and we're excited to be a part of it.
Prosper actually just announced today that they'd reached $1 billion in loans. So, they're doing well there with
They've reached $4 billion so far, both of them combined, up to 2013.
Yeah, and I think Lending Club was looking to do about $3.5 billion this year. Yeah. I've been following them for a long time.
And that's been 7 or 8 years, right? I think that you see real estate crowdfunding collectively hit that maybe this year, maybe next year, right? But rapidly, much faster.
2 companies in debt that's going to cover almost 45–50% of the whole industry. Mm-hmm. Interesting. Well, go ahead. Well, education. Well, I mean, that's it. When you get a client, and we were doing research in Europe for the last 2 years, and what the platforms in Europe, not necessarily in real estate, saw on the equity side was, the investors want to live vicariously through entrepreneurs. So when they put the money in, they keep the money in there. So when they get an exit, they just roll it over and over again because they like the facility, they like the technology. And I know you guys are spending a lot of money on technology. I know you, Jillian, has a big budget for technology, and you had a discussion with your partner in the past, what to do, how much to pay on it. But what happens is you get to vote online. You get to see through the eyes of the entrepreneurs, and you get to put your money in there, and they keep it in there. But it's it's going to be growing through education. You teach somebody once how to do it, they stay. So while we talk a little bit about education, I want Jillian to start about education and how you get your investors involved in there. Are you doing something unique that besides speaking at every conference there is?
Yeah, we do everything. There's no secret sauce. You have to be omnipresent to educate investors. So we run an education center. We've written hundreds and hundreds of blog posts and hundreds of pieces of our own content on various things from cash flow investing to what is an IRR to what is an ABC class property. Another thing that we do is we actively do webinars where investors are able to ask and we can answer any question that they may have about a specific transaction or about real estate in general. But I'm going to go back to regulatory again. So if somebody calls into Realty Mogul and we plaster our phone number everywhere, it's not somebody random that picks up the phone. It is a registered, licensed representative of the broker-dealer. And I want people who are talking to clients to be registered. I want them to be licensed. I want them to come out of a regulatory environment where they know how to educate investors. They can educate investors because they've been trained. And training is paramount at our company. All of our employees go through our training boot camp. We're very, very tight on training because we want to educate investors a certain way. And the way that we want to educate investors is as broad-based, general as possible about the real estate industry. If you educate an investor, they are a client for life. And I really, really believe in that. And not only am I speaking at a lot of crowdfunding conferences, but I'm speaking at all kinds of conferences to all kinds of people to talk about what is real estate investing, how does it work, what are the benefits, why have they never had access to this before. So education is really key to our value proposition.
And how does the rest of the panel look at it?
What's interesting to me is I'm actually educating hedge funds on how the whole crowdfunding space is working. So that's news to me. I mean, we do all of the above that Jillian does, obviously blogs and emails to the crowd, telling them what we're doing. We've done a couple of webinars already. And it's all about the phone. I mean, we get so many phone calls every single day. How does this work? Why didn't I see this before? What are the risks? What are the pitfalls? Who are you? Why did you come into this space? And so we have to tell all these people what we're doing and how we're doing and why we're doing what we're doing. And it'll just continue. I think to be fair, we all on this crowd, on this table today, and other people in the space, not just in the real estate space, but in the whole crowdfunding space, we're all peers. We're bringing the accredited investors online and teaching them together. Jillian's doing some of that, David's doing some of that, I'm doing some of that. And I think it's a testament to how well the crowd's going to be, or the industry's going to be able to work together to bring the accredited people online.
David, you want to answer it too?
Sure. I think there's a lot of information online about how to invest in real estate. If you go into any bookstore that still exists today, there are shelves upon shelves of how to invest in real estate, how to do it on the side, how to do it full time. And I think it's important for all of us to have that content online. But a big question for us is when you go to conferences, people want to say, how does it work? Right? Before they even look at the deal, they want to understand how this even works. So I put money in and I actually own a piece of a deal or a piece of a note, and then how do I get my distributions? And then how do I know that I own something? So it's really around the mechanics of crowdfunding, because a lot of the people who want to invest in real estate, some of them still don't even know Kickstarter and Indiegogo. And they want to understand how it works online before it even gets to the asset class.
Well, maybe we'll take a couple of questions from the audience. Yes, go ahead.
How do you guys manage the risk profile of the portfolio with syndication? My broker's always call me, I've got some reads for you, right? So what's going to cause me to say, no, forget it, I'm going to go to this crowdfunding?
So I heard two questions. One is risk management and one is why crowdfunding over a REIT. So I'll address them separately. But on risk management, very seriously, we have an investment committee. So think good old-fashioned financial services company with an investment committee. We meet weekly. We approve transactions on the platform. We disapprove transactions. We have a risk criteria that we have to meet for every one of our transactions. Again, it's why we don't do ground-up development. It's why we don't do land banking. It's why we don't do single-family homes at 300% of purchase price, right? I mean, our risk profile is very different than other real estate crowdfunding sites. And I'll share without naming names, but there have been no less than 4 transactions that other real estate crowdfunding sites have done that we took to risk committee and we denied. That is a very scary fact, right? And for me, that's how we're building the brand that I want to build, is with a commitment to risk management. So on the second question for us on the difference from REITs, one of the big benefits about direct participation in real estate is you get the tax write-off. So you get to have the depreciation flow through directly on a K1 at the end of the year, and you don't get that in a REIT. And given that our investors are all high net worth investors, they tend to be in higher tax brackets. So that creates a bump for them at the end of the year. It's usually an extra 2 to 3%. They always say in all financial services, it's not what you make, it's what you keep. And real estate is one of the best ways to do that if you're directly participating in real estate the way you are through crowdfunding. Now the disadvantages are it's not liquid, right? I am selling illiquid securities. It is not a REIT, you cannot trade it. And you also don't have the same diversification. If you invest in one transaction with Realty Mogul, you're not going to get the diversification that you're going to get in a REIT. That's one of the reasons why we make it really easy for investors to invest in 20 or 30 transactions with us. They can build their own REIT. They can build their own diversification. And that's really important for us.
How do you get out of it? How do you exit?
So every transaction has a business plan. It ranges from 1 year to 10 years. We tell all of our investors this is an illiquid security. You should be prepared to hold for the long term. You're not investing with dinner table money. It's part of the reason that it's limited to accredited investors today, right? Is the SEC is trying to figure out what does that look like for an investor that maybe can't afford to hold that for 3 or 5 or 10 years. So we're really big, again, from a regulatory perspective on suitability. We run suitability standards on all of our investors. And if you tell me that I need liquidity in 6 months and you're going into a 10-year deal, we actually don't let you go in that deal. We might be the only crowdfunding company that's turning money away on a daily basis because of that commitment to risk management.
Well, you also had a couple exits, right? Do you want to tell us about that?
Yeah, we've had 17 exits. And we don't actually publicize that very often. I rarely share it, but it's really important, right? I mean, those investors, almost all of them have repeated and taken that money and gone into another transaction with us. So there's certain transactions that are shorter than others. There are other transactions that are longer. So if you're an investor who wants, a 12-month transaction, you go on a 12-month deal. You're an investor who wants, 10 years and wants upside, you go on a 10-year deal.
Go ahead. Go ahead.
For Jillian, what's the highest value transaction that you've done, and what's your average value?
That's a hard question because it ranges widely. It ranges widely because of this commitment to diversification at our company. I think our largest transaction is north of 20 million, and our smallest transaction is probably 100 grand. So, very, very wide range.
On the deal side, what, a single property for 20 million?
Yeah.
Well, you guys done some debt deals. Maybe you want to talk about that, what your size of your deals was, Carlo.
So far the deals we've done range anywhere from 100,000 to 550,000. Again, the reason we're staying in the lower range of that is to be able to diversify across the asset class, across the USA. There's not that many houses out there in the multi-million-dollar range, maybe San Francisco, Beverly Hills, etc. But we're able to, the same way as Prosper and Lending Club, give thousands of these loans across the USA. We're focused on the short-term debt side of things, so there's quick liquidity. If you want to get out of a deal in 6 months, that's about the range of our deals. So far, we've had 2 of our deals exit out of 9, and with another one coming in a couple more days.
Thank you. Well, look, we're going to be wrapping up on the real estate panel, unless you have another question. Okay, we'll take the last one over there.
So we talked about a number of different portals that already exist and will probably by the end of the year many more. For the panelists here, are you guys investing in marketing your specific portals and investments that are coming through your portals? How does an investor, there's 25, maybe 30 different portals. Are investors going to go through all these different websites to try and find the best options out there? Are you
Well,
actively marketing?
before they're answering that, when I wrote the Forbes article, the top 10 about a year ago, I've been telling people since, you know what? Call them up, educate yourself. And some of the funds and developers have gone out there and actually started calling every single one. Takes them a couple of months, but they're educating themselves that way. But I'll also let the panel here answer that question.
Sure. I think that the companies with the strongest leadership teams are going to continue in this space. So I'm excited to be up here with them. There are going to be people who think that they can just slap up a website and that people will come, and that's not the case. You still have to have a digital marketing arm where you're reaching out to people online, educating them about who you are, what your background is, why you're a credible team, how you're underwriting your deals, and then the investments will speak for themselves. We think that quality will trump quantity, And accredited investors are intelligent and savvy, and they will be able to look at investments and see whether the opportunity is a good one for them. They had all talked about recent deals, so we just launched less than a week ago. We announced our first investment. It was an opportunity that only our investors could see. It wasn't publicly announced, and it was a purchase of an office. It was a purchase of a loan backed by commercial office property in Trump Palace in New York City. So it was a $485,000 loan. The property had a $1.05 million recent appraisal. It was a 46% loan to value investment, and the investors are receiving a 9% interest rate on that annually. So, you know, we have a heavy emphasis on debt, and that was an example of one of the deals that we do. We think that the investments that we present are a reflection of our brand, and certain companies that are just going to start letting anybody raise money, they're just not going to stick around. They're not going to make it.
If I could just say, in terms of getting our name out there, I think we're all doing the same thing in terms of digital marketing, and it's a great way of getting your name out there. That's why we hired Adapir, who has the experience to put our name out there. Just by way of example of the people that are finding us, I've already received calls from about 5-6 hedge funds now. One's a $1 billion fund asking me how this crowdfunding space is going to work, how we're doing our due diligence, how we're doing all these questions. It's a preliminary call, but it's like, I want to speak to you again tomorrow. And so they're reaching out. People are hearing about us. We've added a strong advisory team. One of the early employees of Lending Club, another Wall Street hedge fund guy with a multi-billion-dollar hedge fund. They're on our advisory team. And like David said, you've got to build a strong base of people on your team to show that you're legitimate. You're not here just for the taking of the money or fraud, as some people have said. And so as those names get out there and they see we're legitimate, the hedge funds are calling us.
Well, we're going to ask everybody here on the panel to maybe summarize what do you want from this audience and what do you want the next 12 months that this audience can help you with. And that will be the end of this panel because, you know, to me this is an exploding industry. And here's the verification from these panelists how it is. So go ahead, David.
Sure. You know, we keep talking about crowdfunding real estate, and crowdfunding actually has to do with raising capital from unaccredited investors. So we're, again, at least in the real estate space, when we're educating our sponsors, we're telling them that we're a Reg D platform, a Regulation D platform, and we're trying to go back to basics with them. So, you know, as a group of people in this room who want to see crowdfunding thrive, we want to see crowdfunding for real estate thrive. It's really important for all of us to make sure that we are holding a high bar, that we're showing good investments to investors, and that we really help each other as peers, because I don't think that we're really competitors to each other. We're really competitors to the industry of real estate, which is so deeply ingrained in being traditional. And so it's really important for all of us to spread the message and send a message of legitimacy to the industry and to investors to let them know that this is real.
Thank you, David. Carlo?
Again, we're just trying to get our name out there, get the brand out there, get the industry out there to try to beat the people who are in the business today. We Patch of Land are now out there trying to actually raise money. So that's the one thing. If anyone's out there and looking to invest in a platform, we're just at that early stage round right now where we're looking to get out and build a company.
I'm a very direct, straightforward entrepreneur. So what I want is raving fans about RealtyMogul.com. I want every accredited investor in the room to take a $5,000 flyer in one of our investments if it's suitable and become a raving fan. I mean, the people who are investing with us love us. You know, there are CEOs who have to deal with love emails and CEOs who have to deal with hate emails, and I get love emails all the time, and it's going to maintain that way as long as I possibly can. We're building a really, really great culture at Realty Mogul, and what we want is raving fans.
Thank you. Give them a hand of applause.
Our next